There are four main roles of managerial accounting. The first one being planning. And planning is the establishing of goals and specifying how they're going to achieve those goals. We can break planning into two kind of categories. The first one being strategic planning. Strategic planning is deciding on long-term directions of the entity. This is the long-term projection of where they see the company going and how they're going to get there. Now, we can also break this down into the second category, which is the operational planning. Operational planning is deciding on how to implement those strategic plans. So this is more of the short-term, step-by-step plan to get to that strategic plan that we're trying to get to in the long term. Now, we also include in planning what's called a budget. Now, a budget is a detailed plan for the future that is expressed in formal quantitative terms. This is something that most of you are probably familiar with, you've heard about. This is where we're going to project where we're going to see ourselves financially in the next 5 to 10 years, and then also the operational side of how we're going to get there. So that's role one. Role two is what we call controlling. Controlling is the monitoring of the day-to-day operations to identify any problems that require corrective actions. So as we go through this, and we've already planned, we're going to look back to see, are we actually doing what we're supposed to be doing? Are we hitting the marks that we want to hit? And if not, then we'll fix those. This involves gathering feedback to ensure that the plan is being properly executed or modified as circumstances change. So obviously things are going to change. You can't forecast what's going to happen and accurately forecast what's going to happen in 4 years. So obviously we need to change some things. So controlling is role two. Role three is what we call evaluating. This is comparing the particular period's actual results, what is actually occurring, to the budgeted or what we planned. And these results are for the purpose of assessing managerial performance. And finally, the fourth one, and this is arguably probably the most important one because it's that last one, is the decision making. And this involves selecting a course of action from competing alternatives. So are we going to go with continuing on the same course? Are we going to change? Are we going to go with option A versus option B? Those kind of things come up, and this is why we need managerial accounting and what the role of the manager is.